Okay, let's go ahead and get started on the webinar. Life Settlements Made Easy with IMS Associates. We have been doing life settlements since the inception of life settlements. We have a very good, strong idea of where the market is right now. We have a good idea as to where it is going. We're really excited about life settlements here. We have really seen it take off in the past year or so. We have a very good relationship with our buyers, and we consider ourselves the leader in this market. So we'll go ahead and get into it. The webinar overview, we're going to just give you a brief overview on life settlements, what a life settlement is. We're going to be talking about the benefits of life settlements, why it is good for your clients, obviously you as agents. It's a win-win for everyone involved. We're going to be talking about cases that qualify. We're going to go over 3 different real-life deal examples. These are actual deals that we have done recently with life settlements. Going to go over the process for you, have some time expectations, how we can see these deals typically playing out. We'll go into some of the underwriting, what our buyers are looking for, how they're pricing these things. We'll also go into the tax treatment of life settlements. How are the taxes when we are doing these settlements, how are they taxed? And we'll go into deal sourcing. Where do I find these type of deals? You could have a few, under your nose right now and not even know about it. So we'll go into, how do we find these type of deals? So life settlement overview, what a life settlement is it's a sale of an existing life insurance policy that generates proceeds for the client that exceed the current cash surrender value. Now, when I say cash surrender value, that should make you realize that these are permanent policies. We cannot sell term policies. They need to be permanent policies. If they are term policies, the number one thing you'll want to know is, are they still convertible? And that, we'll get into later, can be a nice sweet spot for the agent. Now, a life settlement, the institutional buyer becomes the policy owner and the beneficiary and assumes premium payments on the policy. Diagram here is going to kind of show how this process works. So the policy owner gets the policy to the financial institution. They then are able to get immediate cash to the policy owner. The financial institution then pays premiums to the insurance company for the policy in return for the future death benefit after the client has passed. So the financial institution is going to be buying these policies and also being the beneficiary on them as well. They'll pay the premiums. Now, keep in mind, these financial institutions, this is, these are big companies. They are not your average Joe walking on the street who wants to buy these type of policies. They have to be licensed to buy these type of policies, and they're, they're not individuals that are buying these policies. They are financial institutions, pension funds, things of that nature. Now let's get into the benefits of a life settlement for your clients. So what it's going to do for them is it's going to eliminate an unneeded life insurance policy and all the costs that come with the policy. It's going to provide the client with liquidity. They're going to be able to do what they need to do with the cash. So if they need to pay off medical bills, if they want to buy a new car with it, if they want to go on a trip around the world, whatever they want to use for these type, with the cash, they're going to be able to do so. On top of that, they may be able to buy a more efficient policy than they already have. They may be able to put it into an annuity or a long-term care product that's really going to help them down the future, as opposed to this life insurance policy that really isn't doing anything for them currently, and they would rather have cash now than wait around for their death in order to get cash to the current beneficiaries. So really, they're going to be able to use this cash immediately and however they see fit. Now we'll get into the cases that qualify. So the policy parameters, we break them into a normal life settlement or a small policy. Small policies you'll see on here anywhere from $10,000 to $500,000. What we do on these is we have a small policy application form that's filled out. Tele-underwriting is done. Typically we get an offer within 1 to 2 weeks on these. The buyers are able to kind of internally price it and are able to turn around and have an offer in a relatively short amount of time for these smaller policies. Now you can see on both the policy parameters, the normal one's $500,000 and higher. The minimum age we want to get these are at 70 years old and higher. Now I say that at the same time, we can sell policies. We're currently doing one on a female, 56 years old. She, however, has a brain tumor, inoperable brain tumor. Her life expectancy is not very long. Therefore, she is going to qualify for these type of life settlements. But for the most part, we're going to want to be looking at it 70 years old. They're going to want to have some moderate to major health concerns. If it's a much larger policy, we can look at just some minor health concerns. Now we don't want people that are only, a few months to live. We don't really do those viaticals. They're different than these. You can see, the life expectancy is 165 months or more. One thing you'll really want to keep in mind on these is the contestability period. You can't sell a policy that hasn't been enforced for at least 2 years. And, with my experience on it, I can't imagine you being able to sell a policy that's only been enforced for 2 years. There would have to be some major health changes from when you sold the policy to the client originally to the life settlement. So 2 years seems like not that long of a time for there to be that much of a health change where a life settlement would be something you would want to look at. Now we'll keep moving along. Transaction process. So how long can we expect these type of policies, how long can we expect this life settlement process to be? Really, you want to allow 3 to 6 months. Now, that first 60 to 90 days, we're getting the application, we're getting the policy information, which means we are, getting the illustrations, getting the, premium information. We're also going to get access to the medical records. We're going to order the medical records. We have to wait to receive the medical records, which I know some of you guys have been dealing with Kaiser lately. You can imagine that can take some time to get the medical records. After we get the medical records, we then order life expectancy reports. Those reports tend to take anywhere between 7 to 10 days to get from the life expectancy company, sometimes longer if it's a more complex case. Now at that point, we're able to start getting offers. Once we get an offer, we're able to accept or reject the offer. These are non-binding, it's a non-binding situation. You're never going to be in a situation, your client's never going to be in a situation where, it's a binding thing and you guys can't get out of it. Until you sign that very last closing documents, you can pull out at any time. Now the policy sale process is going to work similar to a real estate transaction. What we're going to need to do is complete formal documents, and it's going to be an escrow closing process, similar, like I just said, to a real estate closing. Then the funds will be dispersed to the client upon transfer of the policy ownership. So when we're doing this closing at the same time, we're also sending in beneficiary change forms and owner change forms to the carrier to make the buyer of the policy, obviously the owner and the beneficiary. Now let's get into how we do business here at IMS Associates. Now, what we like to say is we do all the work for you. We make this a very, very easy situation for you and your clients. We're going to order all the APSs. We're going to order multiple life expectancies on every file. Typically, there's really 3 big players that do these life expectancy reports: 21st Services, AVS, and Fasano. We typically always order a 21st and an ABS, and if it's needed to get the deal done, we will also order a Fasano. We also order all the in-force illustrations. We'll get into this a little bit later. The in-force illustrations, what we're looking for is to run these illustrations with a level premium showing the death benefit going to age 100, and at that age 100 we want no cash value of $1, as close as we can get to that number. And we obtain the current values on the policy to know, where we're currently sitting on the policy. We're going to pre-price every case. We've got enough cases out to market right now, and we have, as good relationship with our buyers as anyone in this industry, where we're able to kind of know where this policy should price out. Once we get the illustrations, once we get the life expectancies, we'll know, what we think we should be getting on this, and we'll be able to give you, a realistic expectation on the policy. Now we're going to shop the market for you on the best offers. What we do is we run an open auction process. The case is going to go to all of our 35-plus buyers. Depending on the state where the policy was written, that is where the buyer needs to be licensed to buy the policy. So if it was signed in California, the buyer needs to be able to buy these things in the state of California. So the buyers can differ depending on whether or not they're licensed in a particular state. We're going to obviously have open communication with you. We're going to give you a weekly status on how the process is progressing. If at any time you need to call us, we will happily take your call, answer any questions on it. Obviously, if something comes up within that weekly status, we'll get that information to you as soon as possible. It's a very transparent situation. We disclose all our bids and all our compensation. Everyone's going to be on the same page as far as what everyone is going to be paid. We think we provide the best agent, advisor compensation in the market. We feel like we are definitely the top tier of how we treat our agents that bring these type of cases to us. Like I said, direct access to 35-plus buyers. We know these buyers on a first-name basis. Been working with them for years. Very comfortable situation. It's almost our guarantee. What we like to say is if you don't like how the thing is going, if you don't like the offers we're getting, you don't like the time it's taking, you don't like our explanations, we hand over everything to you. The APSs, the illustrations, the life expectancies. You're free to take all the work that we've done, the money we've spent, take it wherever you'd like, where you think you'd be able to get a better deal done. That's how confident we are in our process here. Now, a little bit more on how we do business. You can kind of see this is going to get in more into the compensation and, what we do in terms of how, in terms of the face amounts. It says 10K to 499K, or I'm sorry, 100K to 499K. That can be almost 10K to 499K because we do those smaller cases. And what you'll see here is it's a compensation split of 40% to IMS, 60% to the agent. Now on the 500 all the way up to 999,000, 35% to IMS, 65% to the agent. 1 million plus, it's a 2/3, 1/3 split completely. Now how this compensation goes is we cannot exceed 30% of the gross offer or 6% of the face amount, whichever is less. So if it's a $250,000 face amount policy and we get, let's say, $150,000, we're still only going to be able to take $15,000 in compensation. Now, if it's a $1 million policy, we get a $100,000 offer, we're going to be able to take $30,000 of that in that situation. So, there obviously will be exceptions to these, but for the most part, 30% of the gross offer, 6% of the face amount, whichever is less. And obviously compensation, full disclosure on everything. One thing to keep in mind, you're not coming out of pocket, the client's not coming out of pocket for anything in this whole process. So, all the burden falls on us here at IMS to order everything and get the deal done for you guys. Now we'll get into underwriting. The life settlement underwriting is a little bit different than your traditional life insurance underwriting, obviously. Things like prostate cancer, high blood pressure, cholesterol, they're not going to be as big of a concern in the life settlement process. You know, there's many medications that are going to be able to control your high blood pressure, control your cholesterol. What we're really looking for, you know, that's really going to turn the needle and really get some interest in these cases are pretty big concerns like heart attacks, cancer, strokes, neurological diseases. You know, those are the big concerns. What we're looking for is 4 tables of arbitrage, meaning if you sold a policy to someone and they were standard rating, where do we think they would be rated now if they were to go get insurance? We would want them to be at least a table 4 in that situation. Ideally, we'd want them to be a decline. We would want them to be not able to get any insurance. You know, so obviously the best situation would be you sold someone a universal life policy at a preferred best rate back when they were in their 50s. Now they're in their 80s. Obviously, if they were to get insurance, or even their late 70s, if they were to try to apply for insurance, they would be declined for X amount of reasons due to their health. You know, that would be kind of what we're looking for, because, you know, they're going to have that low premium because they got into it at such a nice preferred best rate. And like I've talked about before, there's 3 main life expectancy underwriters: 21st Services, ABS, and Fasano. Like I said, we order 21st and ABS every time. Fasano if it's needed to get the deal done. Pricing and valuations. So policy specific, we're going to want to know the type of policy. So we're looking for universal life policies. We can look for survivorship universal life policies. If you have a term policy and it's convertible, that's great, because what you're going to be able to do is convert that policy to a universal life. Ideally, when they got the term policy, they were in pretty good health, so you're going to be able to maintain that rating, convert it to a universal life policy, get commissions on that big conversion premium, and then turn around and get commissions on the sale of the policy that you just converted to. Now, when we're pricing these, obviously we need to know the face amount. We need to know the premiums, like I said, at age, you know, the level premium to make it go to age 100, no cash value left in the policy at that point. We're going to want to know if there's any loans on the policies. Obviously, that can affect the pricing. The cash value is very important. You know, if someone has $100,000 in cash value in their policy, you know, we're going to have to beat that number for this to even be worthwhile for anyone to do. So cash value is a big part of it. Carrier ratings, it can be a part of it, but it's really not that big of a concern. I would not shy away from coming to us with a policy because you thought the carrier rating was too low. That really isn't something that's too big of an issue for our buyers, but obviously a better carrier rating can help in some situations. For the funder, you know, they want to know their anticipated return on investment. They're obviously concerned with the cost of the capital. And, you know, what they do is they do a life expectancy analysis. So if they get 2 life expectancies, one from 21st, one from ABS, one's 20 months, one is 30 months, they blend it together, they're going to come out with roughly a 25-month life expectancy analysis. And they'll obviously be looking at the premium and the premium reserves. You know, how much are they going to have to pay to keep this thing in force? Now, keeping on with the pricing and the valuations, you know, the premium, the life expectancy reports, they operate inversely. Now, the premiums, like I've been saying, we want it for $1 at 100, the premium reserve at 85%. Now, one thing to kind of keep in mind is this 45% rule, which is very, you know, it's really, we can look at a deal, do this calculation, and know if we have something that is worth pursuing. So we're going to multiply the annual premium for $1 at 100. So whatever the annual level premium would be to get it to go to 100, have a cash value of $1, by the estimated life expectancy in years. So a lot of these life expectancy reports come out in months. Obviously, don't multiply it by months. We're going to want to multiply it by years. So that premium multiplied by the life expectancy in years, we want that sum to be less than or 45% of the face amount. If we can do that, there is a viable deal here, and it would definitely be something worth pursuing. Now, what we'll get into now is our first policy, our first pricing case example. You know, this is a real-life case that we did. It was for a 74-year-old male. Face amount was $250,000. The conversion premium on it was $10,137. So this one was converted, had the premium at $10,137. We ordered 2 life expectancies. They came in at 89 months for the 21st, 88 months for the Fasano. We got a gross offer. So keep in mind, when we hear gross offer, that includes our compensation is in that gross offer. We were able to get $15,000 in compensation from the offer. That means that the owner got $30,000 and $30,465 after the compensation to do whatever he wanted with. $10,000 went to the agent, $5,000 went to IMS. And in pricing the deal, you can see the life expectancy about 7.42 years. The premium to face was nice, 4.05%. So really what we want is for that that premium to really be, the premium to face has to be around or under 5%. That's what we're looking for in terms of what would be a good deal to, or a good policy to sell. And the cumulative paid premium ratio at 30%. So we're under that there. What I'll show you next is the actual illustration that was done for this one. This is an example of it. You can see age 75, that level premium, $10,137.72. Takes it to age 100. If we go over to age 100, we were able to get that cash value down to about $8, which is this is a very nice, clean-looking illustration for our buyers, where they're going to be able to, run their own models and price it how they think, how much they think they would have to put into the policy. So this is a good, good illustration example of what we're looking for when we order these in-force illustrations. Now we'll get into case example number 2. This is on a $1 million face amount with an 82-year-old female. She had a surrender value of $24,241. The annual premium on it was $30,799. So we're good on the premium to face ratio. That's only 3.8%. The life expectancy is 123 months with 21st, 108 months with ABS. You got that blended life expectancy of 9.6 years, roughly. What we were able to get on this one was $235,000 for the gross offer. The compensation was $35,000 we were able to pull off out of it. That was a clean $200,000 to the female to pay for medical bills. She wanted to go on a trip. Anything she wanted to do with that money that was for her use, for her to use how she saw fit. In this case, the agent got $23,335. IMS left with $11,665. Now this agent, to get that $23,000 in compensation, there's really not a whole lot you guys are doing other than bringing the deal to us and then, having communication with the client and really just, quelling their expectations and making sure, that they're well informed of the process. So just having an open communication with the client. Other than that, there's not a whole lot that you guys are going to be responsible for in these deals, which as you can see, that type of compensation for the amount of energy you got to put into it is a very attractive deal, obviously. Now we'll go look at her illustration as well. You can see here, $30,799. It's running level to age 100. We were actually able to get that at exactly $1 with that $1 million in death benefits still intact. That's obviously that's ideal. That's what we're looking for right there. The cash value bleeded out there to $1. So this is obviously a very clean illustration once again for our buyers. The third example I want to get into is a kind of I guess more of a newer type of settlement that we're doing, but these are pretty nice. It's a retained death benefit life settlement. Typically work a little bit better with the higher face amount policies. So as you can see here, it's going to work the same as a normal life settlement. The buyer is going to become the owner and the beneficiary of the policy. The buyer is going to assume 100% of the premium obligation. The buyer is going to pay a partial cash settlement up front to the insured of the policy, and is also going to let the insured retain a specified amount of the death benefit as an irrevocable beneficiary designation that we file with the carrier. So in this case, what we were able to do is there was a 73-year-old male. Premiums were becoming an issue for this policy for this client. But he still wanted to be able to leave something to his beneficiaries. You know, they were all banking on that $5 million. You know, he wanted to be able to leave something for him as well. So what we were able to do is, in this case, get the owner $272,000, where he's going to be able to, you know, use that money as he sees fit. He's going to not have to pay premiums anymore, and at the same time, the you know, the buyer of the policy is able to let him retain a death benefit of $1.7 million. So that's still a pretty nice death benefit for his beneficiaries, and at the same time, he's going to be able to get you know, close to $250,000 to do what he sees fit. Or I'm sorry, over $250,000 to do what he sees fit. In this case, we were able to get $125,000 in compensation. You know, the agent did really well in this, made $83,000 in compensation on this deal. IMS netting $41,660. So as you can see, this can be a very effective tool for those high face amounts where, you know, they're able to retain some of that death benefit while at the same time definitely getting some substantial cash. And obviously you guys as agents are making out quite well. So obviously you can see here it can be a great fit for you as agents, obviously a great fit for the right client who, you know, needs to get rid of this policy for whatever reason. The only person that isn't happy about it probably is the carriers. But one thing to keep in mind, I know there's been some, you know, some talk about maybe the life settlements being taboo. People don't want to touch it. You know, keep in mind it's a highly regulated industry. All of our buyers are licensed. This isn't something, you know, that's going to affect your you know, your life insurance license. You guys do not need to have a special license for it in order to bring these deals to us. And like I said, heavily regulated industry. It's definitely something that is obviously 100% legal and can really help a lot of our clients. Next thing we'll get into is the tax treatment of the universal lives for the ULs, and basically how the taxes work out. You know, and we'll start by saying we are not tax professionals. We don't offer tax advice. But one thing to keep in mind is that settlement you can see here in this case, a 12-year-old $1 million policy. You know, they paid their premiums. They have their cash surrender value, so that the difference there, that $10,000 is taxed as ordinary income. You know, the gains they've made on the policy. Now, when they sell the policy, that difference, if they sold it for $200K, that $140,000 difference is going to be taxed as a long-term capital gain. And so that's something to keep in mind for the clients. They're obviously not getting this money tax-free. It is going to be taxed. Now let's talk about where we can find these deals. Obviously, number one thing, working your book of business. Keeping in contact and having good relationships with your clients, you know, knowing their situations, knowing which clients would be a good fit. You know, I know you guys get notifications at the end of the guarantee, and, you know, we'll want to be paying attention to the end of the guarantee periods, the end of the conversion periods. You know, you'll see surrender requests, you'll see replacement requests. These are all red flags where you're going to be able to reach out to the client and see if a life settlement might be the best fit for them. You know, the worst thing we'd want to do is just let someone put a bunch of money into a policy and simply let it lapse, and they're left with nothing. That's obviously something we're wanting to avoid. And, you know, one thing to look at too, death claims. Let's say there was a husband and wife. They each had a life insurance policy. The husband dies. The wife got that death benefit. You know, if it's just the two of them at this point, she probably doesn't need the policy. She's probably thinking about letting it go at that point, not putting any more premiums into the policy. That's a perfect time to get in there and see if a life settlement might be the best option for her rather than letting it lapse. And obviously centers of influence, attorneys, CPAs, wealth managers, you know, they're going to be the ones that are going to be dealing with the clients, and you know, realistically, the clients might be coming to them first and asking what they should do. You know, what do? I can't make this premium payment, or I really need the cash now, and I have no way to access it with this life insurance policy that I have. You know, so it's definitely good to be in with those centers of influence. Now, I appreciate you all joining me. I'll open it up now to any questions you guys may have. Here's my information there. That's my direct phone line. That's my email address, obviously. You can obviously visit our website. We've got a whole section built out for life settlements. You'll be able to get any information there. Don't hesitate to reach out to me if you guys have any questions or any clients you'd like to discuss. So unmuted all you guys. Does anyone have a question for me?
Andrew, you said that IMS was in the business since the inception of life settlements, but you didn't say what year that was.
That was, I'd say that started about 1996.
1996?
Or so, yes.
Okay.
And, you know, we've really, obviously there was a big, you know, the strongest life settlements have ever been was, you know, 2003, 4, 5, 6. Even 2007, and you know, when the economy kind of did what it did, that obviously affected everyone's access to capital, and in turn, you know, we saw life settlements kind of take a dip. Obviously, things are seeming to be on the upswing now, and we're seeing our buyers having a lot more access to capital.
There's a lot of feedback when you're talking. You probably should mute when you're talking.
All right, yeah, I appreciate that. So, any other questions? Okay. Well, if there's no more questions, I will let you guys go. Enjoy the rest of your day. Please reach out to me if you have any specific questions, and we will go from there. This webinar should be on our website in the next week or so, and you'll be able to access it there as well. So appreciate you all for joining me, and we'll see you at the next one. Thanks so much.